Hello everyone, welcome to JAIIB English Medium. This is Aarti and I hope you all are doing good. So as you know, this is one of the very important series known as Raftar series for all the JAIIB candidates who are planning for upcoming May 25. Then save this series, not only for your AFM, for your all remaining 3 subjects also, so that you can understand what type of pattern in exam they are going to ask, correct? And you can do the revision if you have already enrolled in our paid batches. So this is the perfect way for your revision. So without wasting any time, we are going to start. But remember, if you are visiting to this particular channel for the first time, do subscribe it. Share with your colleagues also who are planning for JAIIB and they are ready for JAIIB upcoming May 25 to clear in their first attempt. Then this is the important channel and you can like this session so that you can revise it in your future also. Whenever you have your spare time, use this series, not only AFM but all the remaining syllabus subjects also. Correct? Chaliye. So again, today we are going to start, and remember what you all need to do. You need to read the question and you need to discuss the answers with me. Correct? So share your answers, whether that is wrong, correct. That is the secondary part. Try to attempt. Okay? The more you know, the more you are trying to attempt the questions, the better your confidence will increase. The better knowledge you are going to receive. Correct? Chali. So without wasting any time, now let's start with the very first question. Under the straight line method, depreciation is calculated based on, tell me, A, written down value, cost price of the asset, C, market value, D, revaluation of assets. Now it's your turn to tell me the answer. Tell me. When you are solving straight line method, under depreciation, we have 4 methods. Under that 4 methods, the first method talks about your straight line method. So how you calculate depreciation? Based on written down value, B, cost price of the asset, C, market value, D, revaluation of asset. Tell me. So basically, when you see depreciation, in that this is the first method that you use, correct? And under this method, you use the formula that says cost price minus scrap value divided by number of years, or you can say life, number of years, or you can say life. So your straight line method talks about, yes, talks about cost price of the asset. Okay, not the WTV, not market value, not your revaluation of assets. And each and every year you are going to see the constant amount. That is what SLM talks about. Chali. So the correct answer is option B. Now, next question. A company has total sales of 5 lakh and a cost of goods sold 3 lakh. What is the gross profit? A, 2 lakhs, B, 3 lakhs, C, 5 lakh, D, 1 lakh. In this question, now you need to calculate the gross profit amount. Gross profit amount. Be careful and try to solve and tell me the answer. So, what is the gross profit? Okay? When you prepare trading account as a manufacturer, as a trader, when you are preparing your that manufacturing account, that trading account, in that you take all your direct expenses. You take all your direct expenses. Correct? You take your opening stock, you take your purchases, you take your all the direct expenses, then you take all your sales amount, then your closing amount, and whatever difference comes, that is your either gross sales or that is your gross profit or that is your gross loss. Correct? So basically in this, they have given you the sales amount. They have given you the sales amount and the COGS amount. COGS amount. That is your 3 lakhs. Now, how to calculate COGS amount? See, for COGS, you need opening stock plus your purchases plus direct expenses minus closing stock. Isn't it? This is the method for calculating your COGS. Now, next thing they have given you, that is sales amount. How much? 5 lakh rupees. Either you subtract sales and all these things, or directly you can use the COGS on behalf of this many different terms. Okay, you can directly use the COGS. So if you use the formula of gross profit when sales and COGS amounts are given, then 5 lakh minus 3 lakh, that will give you 2 lakhs. So your profit is, yes, correct, 2 lakhs. The profit is 2 lakhs. This is your answer A. Okay, this is your gross profit. This is the profit you have calculated with your direct expenses, with your sales amount. Okay, as a businessman, as a manufacturer, if you're manufacturing the products, so what is the cost you incur, and by selling that product, how much you have earned. That is what gross profit talks about. So the answer is 2 lakh rupees. Bilkul correct. Coming to the next question, the diminishing balance method of depreciation is also known as A, straight line method, B, written down value method, C, units of production method, D, sinking fund method. What is the alternative name of this diminishing balance method? We have different names, correct? What is the another name for diminishing balance method? Straight line, WDV, units of production, sinking fund. Tell me. Tell me the alternative name of diminishing balance method. Diminishing balance method is also known as your written down value method. Okay, because in this you are going to use the opening amount of your asset. Okay, whatever amount you are getting after depreciation, that we are going to use. So that is diminishing balance method, written down value method. Okay, SLM will keep your amount constant. Under WDV, you are going to keep your rate constant. Correct? Here rate, here amount, and here units that you produce. As per that, you are charging depreciation. Correct. So the correct answer is your option B. That is your written down value method, also known as diminishing balance method. Coming to the next, if a purchase of 1,000 is recorded as 10,000, it is an example of A, error of omission, B, error of principal, C, compensating error, D, error of commission. This question is based on your errors. At the time of preparation, when you prepare trial balance, okay, if there is a mismatching between your debit and credit, so we have learned about so many errors. Now, how to identify that which type of error your accountant has made? That is the next important thing. So basically, we divide our errors into two sides. And we divide our this errors. First is your clerical error, and on the other hand, you have principal error. And again, your clerical error divided into three heads. Like number one, you have omission. Then you have commission. And then you have compensating error. So if you have purchased for 1,000, but there is a arithmetical error while recording, so that is what? That is your error of commission. Okay, that is what error of commission. When you are writing wrong amount, okay, when you are writing right amount on the wrong side, when you are doing totaling error. So if you are making these type of errors, that is your error of commission. So the correct answer is option D. But what is compensating error? Compensating error means because of your one mistake, okay, and because of your next second mistake, both mistakes compensate each other. Because of nullifying, because of these two mistakes, you are not able to find what is the actual mistake. That is what compensating error. ठीक है. In your one expenses you have shown undervalued amount. On the other hand, in your another expense you have shown the overvalued amount. So because of the undervalued and overvalued amount, your expenses got nullified. So that is what compensating error. That is what compensating error. Correct? Then error of principal. In this you are writing assets as expenses, liabilities as your capital, or liabilities as your income. When you are making these type of errors, then that is error of principal. Omission error means there is no entry for that specific transaction. You have omitted the entry only. Okay? There is no, you can say there is no print of that entry in your books. Okay? There is no such entry. You have forgotten to write that entry. So that is what error of omission. But in this question, they have not omitted the entry. They have passed the entry. But while recording, they have made the error. Correct? They have made the error in a transaction in an amount. That 1,000 recorded as 10,000. So that is your error of commission. So the correct answer is yes, error of commission. Chali, coming to the next question. Share premium account is also shown under which section under the balance sheet? Fixed assets, reserves and surplus, current liabilities, contingent liabilities. Tell me. Share premium amount. When you're preparing balance sheet as per schedule 3, so under which head you are going to show this share premium account? Fixed assets, reserves and surplus, current liabilities, contingent liabilities. Tell me. Under which head? So share premium account is which type of amount? When a company issue shares for more than their face value. Correct? Suppose face value is rupees 100, but in market actually they issued for rupees 120. In market they have issued for more than face value. So the difference, so that difference is what? This is your premium amount. This is your premium amount. So this is your premium account. Okay? So this is shown under your reserves and surplus. Yes, this is shown under the reserves and surplus. When you prepare your balance sheet as per your schedule 3, you need to show it under reserves and surplus. So the correct answer is option B. Correct? And there are limited use of this also. You cannot use this amount for every purpose. There are limited use. Like you can do the buyback, you can use it for the bonus issue. Then only you can use this share premium account. You can use it for the redemption of debentures, your redemption of your finally maturity payment of your debentures. So for that thing you can use it. Correct? You cannot use it for the purchase of land, for the purchase of building, for purchase of vehicles. You cannot use this securities premium amount. So the correct answer is option B. Fixed assets, they are going to show you your assets. That is your tangible and intangible assets. Correct? Tangible assets like you have land, building. So this type of things are going to show under your fixed assets. Intangible assets like you have patent, trademarks, goodwill. All these things are going to show under your tangible assets. Reserves and surplus, you are going to show share premium account, your net profit amount, your capital redemption reserve account, your capital reserves, all the different type of reserves that you are holding as a company, that you are going to show under reserves and surplus amount. After that, under current liabilities, all the obligation whose life is less than, okay, whose life is less than 12 months. Then you are going to show it under your current liabilities. Correct? And contingent liability, when you are not so sure, You are not so sure, but because of your past events, you are able to predict that some kind of liability might arise in future, but you are not aware, you are not even able to estimate the actual amount. Okay, possibilities are there, possible outcomes are there. So that is your contingent liabilities. Okay, so your reserves and surplus account is shown under reserves and surplus. That is your option B. Chaliye. Now next. Given the following, opening stock 30, purchase 1,20,000, closing stock 50, sales 2 lakh, what is the gross profit? What is the gross profit? Tell me the gross profit. In your previous question, we have used your COGS. Okay, but now they have given you the more detailed question. So now how to calculate gross profit? If you don't know, then the easiest thing is go and prepare your trading account. If you know this trading account, then easily you can calculate gross profit. Okay. Opening stock, then your purchases, then you have sales amount, and you have closing stock. So opening is how much? That is your 30,000. Then you have purchases, that is 1,20,000. Then you have sales amount, that is your 2 lakhs. Then you have closing stock, that is 50,000. So if you add both the sides, you can see your sales and closing stock. Your credit side is more than your debit side. So this is your 2,50,000. Correct? This is your 2,50,000. And finally, you can see on your debit side, you have only 1,50,000 amount. So there is a difference of 1 lakh. Yes. So this 1 lakh is what? This 1 lakh is your gross profit. This 1 lakh is your gross profit, because you are having more amount, you are having more income side than your expenses side. So the correct answer is again option B. That is your 1 lakh. Coming to the next question, the part of authorized capital that a company offers to the public for subscription is called A. Issued capital, paid up capital, reserves and reserve capital, D. Subscribed capital. This question is again from the company's account 1. Tell me. Authorized capital is also known as your nominal capital. Okay, this is also known as nominal capital. This is the nominal capital. So out of this nominal capital, whatever company are issuing to the public, that is known as what? That is known as what? Tell me. So, one, we have authorized capital, correct? From this authorized capital, what you are issuing to public, that is your issued capital, correct? That is your issued capital. And from this, how much public they are subscribing, that is your subscribed capital. So, always remember, your issued capital cannot exceed your authorized capital. So, part of your authorized capital as a company you are issuing to the public, that is your issued capital. That is your issued capital. Correct? Paid up capital, as an investor, when you are paying for remaining amounts, that is your paid up capital. Reserve capital, we have seen just now. Then subscribed capital, as an investor, how many shares they are going to purchase, okay, for how many shares they are interested, so they are going to do the subscription. That is what subscribed capital is. So the correct answer is option A. Chaliye. Next, which of the following statements about preference shares is incorrect? A, they get priority in dividend payments. B, they do not carry voting rights under normal circumstances. C, they receive dividend only when the company earns profit. D, they have a right to participate in management decision. You need to identify the incorrect statement related to your preference shares. So basically we have share capital, and that share capital is divided into two types of shares. You have equity and you have preference. So if you purchase equity, you share the ownership. You are sharing the ownership, and along with this ownership you are getting the voting rights also. You are getting the voting rights. Okay. But when you purchase the preference, now what are the features of preference? You are going to receive fixed dividend. Okay, you are going to receive the preference over equity at the time of liquidation. So these are the benefits you get, but in this you never receive voting rights. No voting rights means you are not going to be a part of management decision. No, you are not going to get a right to participate in a management decision. So the correct answer is option D. See, why first statement is true? Because they get the priority in dividend payments. Yes, that is true. They do not carry voting rights. Yes, they are not going to receive. This statement is again true. Then they receive dividends only when the company earns profit. So yes, that is again true statement. If company is making losses, so how come you can receive dividend? Even if you are cumulative, your right will shift. Your right will shift. Correct? So the correct answer of this statement, in which you need to identify the incorrect statement, that is your option D. That is your option D. Okay? So all your about three statements are correct. Now, coming to the next, bonus shares are issued from, tell me, evaluation reserves, free reserves or securities premium, loan from financial institutions, the cash reserves only. Now, bonus shares. Now, what do you understand with the term bonus shares? Bonus shares means you are issuing to your existing shareholders for free. Okay, you are issuing more shares to existing shareholders, but for free. Correct? Means you are giving additional shares without receiving any cash. So while making accounts from the first unit, we are always saying we need to do the double entry. If we are doing the debit, we need to show the credit. If we are showing the credit, we need to show the debit. So if we are issuing more shares, means we are increasing our share capital. But how you are increasing? What is your debit side? What is your debit side? How you are arranging the fund? As a company, if you are saying that you are issuing extra 1,000 shares to your existing shareholders, and from where? What are the things that you have used? From where you have received this much amount? So, as per your section 63 of your Companies Act, they say that you can use your free reserves, your securities premium, capital redemption reserve, capital reserve for your free distribution of bonus shares. So, as per that, your correct answer is option B. But under your reserves and surplus, you have one more reserve, that is your revaluation reserves. Revaluation reserves are never used for your bonus distribution, because this is a nominal kind of a nature. This is a notional account. This is a notional account. There is no actual cash over there. Okay, that is just a notional account. So you cannot use revaluation reserve. You can use bonus shares are issued issued from free reserves or securities premium. Just now I have told you when we were solving securities premium question na, that you can use it for bonus issue. Okay? Not revaluation reserve. No. So the correct answer is option B. Chaliye. Loan from financial institutions? No. Cash reserves only? Answer is no. So the correct answer is your option B. Chaliye. So with this we complete today's session, but there is a good news for each and every banker that this upcoming Saturday, means on 8th of March, we are visiting to Bangalore for Bankers Conference. So if you are nearby Bangalore, so try to visit this particular venue. We have already provided the venue. Okay? The time is morning 10:30 a.m. So if you are interested, you can scan this QR code and you can fill the form also. And apart from that, if you want link, we can also provide the link also of this particular conference. And next day, means on 9th of March, we are visiting to Hyderabad also. So if you are from Bangalore, you can visit on 8th. If you are nearby Hyderabad, then you can visit on 9th March. But please, please, please first fill this Google form. You can scan it, or if you are not able to scan this Google form, you can ask through the comments also. But let's make this event a successful event, because always we use this online technology, but sometimes we require face-to-face conversations also, correct? So it's a right time to meet our bankers who are preparing for JAIIB, CIB, or if you are a banker, then also you can come. So please inform your friends and colleagues who are living in Bangalore or Hyderabad, because now time is very short. So we are excited to meet you all. But remember one very important thing, that if you want to enroll in our batches, so our batches are also out, and how you can enroll in that, let me tell you that. You need to visit to Adda 24/7, because I can see so many of you are, though they are joining every day, but if you are not aware of the concepts, if you are not aware of the why we are using this concept, why this answer is wrong and that answer is correct, if you don't know the reason, then you can solve it with the batches. So you need to visit to Adda 24/7. This is our home page. All courses, JAIIB, CIB. Okay, your attempt is JAIIB May 25. So if you click, this is our, again, so many courses over here. So this is your JAIIB Increment Mahapack, in which you are going to receive your Mahapack, means all your concept classes, crash course, whatever in future will come, and your revision classes. Apart from that, you will receive the hard copy of books. Okay, you will receive the bundle of books. That is the benefit of this Mahapack increment box. And then you have JAIIB Mahapack 2.0 if you want all your concept classes. Okay, in this also you are going to receive, but only online mode. There is no offline hard copies of that booklet. But if you want only the concept batches, then this is your concept batch. This is your Hindi bilingual one, Hindi one, and this is your English one. So you can enroll in this, because the next batch, this is the final and last batch for your concepts. This will start from 8th of March. So you are going to receive your all the 4 subjects classes. And remember, if you want to see the study plan, you just need to scroll up and you need to click on study plan. Here is your study plan for all the 4 subjects, correct? And the important thing is, if you purchase it right now, okay, if you want to purchase it right now, you are only getting what, 78% off, है ना? But here is a one coupon code through which you can increase this discount, and that coupon code is Y895. As soon as you are going to apply it, you can see your discount amount increases, and you are going to receive 80% off. Means more, means less amount now you need to pay, correct? So try to use the coupon codes, and if you are planning for Mahapack, then also you can use the same coupon code, because same coupon code will give you the, again, 80% off plus double validity. And apart from this, we purchased from the Adda 24/7 application app, which is freely available on Play Store. Through that, you are going to receive extra 1% off, means you can get the discount of 81%. Okay, so with this, now I'm winding up this session. So if you have any doubt apart from this, you can ask me through the comments also. And if you like this session, do like it and like this session, so that you can revise in future also, so that you can save these sessions. Correct? Chaliye. So bye bye everyone. Thank you for joining.